Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So the new week is ready to start. Let's try to make the trading plan for the beginning of it. That is the euro currency chart, the daily picture, what was happened on the previous week. So you can see market now starting to show some bounce from the support area that we have identified and watching over this area almost for a couple of weeks. And wait, will market show the upward bounce that will be more significant than previous ones, or market will just disrespect this area and continue move down, since in fact market looks heavy on the higher time frames, on the weekly time frame. There the context is absolutely bearish, and all our hopes mostly based on pure technical moment. That market is a bit overextended to the downside because market has hit the 1618 extension of this ABCD pattern that is rather extended, and also market stands as significant support on the weekly time frame. That's why we hope that at least technically market could show some bounce. Well, on the daily time frame, we said that potential target of this retracement could be the confidence resistance. It's around 132.16, 132.34 area. Despite the target estimation that you will choose, all patterns that we see here lead us to this area. For example, if we will use as the pattern the breakout of this rectangle that is forming now on the daily time frame, and a classical approach to the target estimation of this rectangle suggests the counting to the upside the height of this rectangle. So if we measure the height counted to the upside, we will get this area. If you will treat it as some sort of the tight double bottom, the first bottom, second bottom, you should measure the distance between the neckline and the low, and if you will count it to the upside, you will give approximately the same area. If you will use the harmonic swings, you can see the retracements up were rather harmonic. And if market, and for the purpose that market will show some deeper move to the upside, it should exceed the length of the previous harmonic swings. And usually when market does it does it with some multiplication. So at minimum it should doubles the harmonic swing, and if you measure the double harmonic swing to the upside, it will give you the same area. Also take a look that the monthly pivot point stands slightly higher, as around 132.61, and that level also has not been touched yet. So technically picture looks nice, and the perspective of odds of this retracement not bad, looking not bad. Now let's speak about the patterns. We said that although technical context looked attractive, we think that probably market could show the bounce. We still need some more confidence. We need some patterns, some action that will tell us that market indeed starts to show the pullback, indeed could show some upward continuation. And only pattern that we have here is the bullish stop grabber that we have discussed yesterday, and it looks like it works. So you can see market now shows the upward appreciation, and on Friday it has hit the minimum fib level, the nearest fib level, it's 131.10, and upper border of this consolidation. So here is very significant moment for us. Take a look, the target of the stop grabber pattern hasn't been touched yet, and hence that is the minimum target, and hence market probably will show some continuation to the upside. We currently do not know will it be the real retracement to the level that we would like to see, or market will just accomplish the target of this pattern and turns to the downside. That also could happen. But The moment that market still should take it out of these highs, that's 130, 134 area, give us significant room that could allow us to protect our position if we will take it today, or if you have taken it on Friday. As we said, that if you would like, you could try to take the position based on the stop grabber. That's a significant moment. On the 4-hour time frame, here is the target of the stop grabber. You can see that market still stands with the same tendency. We have no signs from the action that this tendency has been broken. That market is really the fact that market is really starting to show the upward move. That this is the short-term reversal, that market is ready to move to the 130 to 40 area. Because take a look how market develops here. Small bounce, more bounce. That looks like the reversal because this swing up is greater than this one. But take a look what has happened later. Small bounce, again big bounce. Small retracement, again big retracement. So if you will take a look at these big swings, you'll see that tendency is still in place. That is lower highs as well as the lower lows. As I said about that on Friday, this tendency has been broken yet. So if market will exceed this high, taken out of this high, and will hold there, that probably could tell us that yes, that will be the confirmation from market. If market will hold there, taken out of these highs, grab the stops and hold there, then we could say yes, probably retracement has started, and we could relax and hold the long position with hope that market will reach the conference resistance or even will touch the monthly pivot points around 130 to 60 area. So that's why we will have to keep a close eye on the development on the 4-hour time frame. Not just because this is the target of the stop grabber, but mostly because that will be the crucial area that could tell us whether retracement has started or not, or market will still stands with the bearish pattern that is developing here. That's why it's very significant. And the second moment, as I said, this room between current market and between the minimum target of the stop grabber has very significant value for us, because this room that could save a lot of our money if we will enter on the wrong side. Because as I said, market could just grab the stops, return right back, and this room will help us to move our stop the break-even point, and we'll lose nothing even if we will become wrong. Now, hourly time frame tells us where we could enter long. First of all, take a look to the right after the resistance. We have the perfect bearish engulfing pattern. It's very good looking solid bars to the upward direction, to the downside, almost the equal of the length. So that is really very good pattern. The area that we could look for long entry, the deep that we could looking for buying, stands somewhere in this area. Depending on how market will develops to the downside, it could reach different targets. For instance, if we will use this the target, the length of the bars counted to the downside, we will get near around 130.12, 130.10 probably. That is the 50% support of the whole swing to the upside, from that low to this high. Okay? If this will be some sort of the ABCD pattern, then market could show a bit small retracement and could reach only, for instance, weekly pivot point, it's 130.30, right around the hourly conference support, 130.32, 130.39. That is also significant area. But in general, we could say that the level around area between the 130.10, 130.40 area, somewhere in this area, is an area that we will look for to enter on the long side of the market. Our invalidation point will be the low of the stop grabber pattern. It's right here. It's a bit far distance, but recall that this is the daily time frame. This is the daily pattern. You probably could place the tight stop on some other reasons, but the real invalidation point for the upward development stands right here. It's 129.10 area. Only if market will totally erase the stop grabber pattern and will take out of these lows, we could say, well, probably we were wrong and probably the retracement up will not happen. But I hope for the, and in general for the normal bullish development, market should not significantly break this area, because take a look at it again on the daily time frame or at the 4-hour time frame. What we see, in fact, here just no significant barriers stand, so there's no reasons to show some deep reversal, deep retracement to the downside, except the moment if market will still follow this tendency. Because yes, if this will happen, you can see market moves from the top right to the bottom. And if this is not the starting move of the retracement to the upside, market could follow it again. But in this case, this move down will not be in agreement with the general thoughts about the retracement. Because what the reason for that move down? Only the continuation, because the targets have been hit, and if retracement really could fall, it should fall right now, because no untouched targets now stand below the market. The only reason for the downward move and taking out of these lows could be only the market's continuation to the downside and absolutely disrespect of current support, and that will show us and tell us how market is weak in reality and how heavy is. Well, that's our common thoughts. So on Monday we will take a look at this area as the potential long entry, the potential target, the minimum target when the market will hit, and if it will hit, of course. This area is 131.34. We should place our stops at the break even. If market will break this border, continue move to the upside. And after that, we could just hold the position and hope that market will reach 132.35 or even will touch the monthly pivot point around 132.60 area.